Well, the funny thing is that there's so much you could do with options,
Right.
and I've found so options are, a derivative basically that are based on the way stocks go, and because of that, you can't really do much better than whatever the stock does. Okay, so people try to do options. They try to, make an iron condor, or they try to sell
Yeah.
options, or they try to do a straddle, or this or that, right? But in the end, nothing beats the return and the risk and the reward of just basic vanilla options, calls and puts, because everything else from there is a compromise. If you get
Right.
a straddle, well, now you have to make twice as much move in order to pay for the loss of having paid for the other side. That's how that works.
Yeah.
So after I learned so much about options and tried a lot of different things, and it can be different for everybody, but I
Right.
really have come back around to just playing vanilla options, is what they mean. Just puts and calls, just basic
Yeah.
options, level two options. Because, that's where you get the most rewarded move on a move.
Mhm. Right. Right.
Although you can do things that amplify, and but that's just way too hard to set up.
Yeah.
So
Okay.
I think where you would start is also maybe where you would end and you would do quite well, which is to do puts and calls. Just call. Focusing on calls is the easiest because it goes with your intuition, which is that when things go up they make money and when they go down they don't. Following that, that's a great place to start. And eventually you go like, you know what? This thing's been tanking for days. Maybe I should get a put on this, and then you get a put, and of course, whenever you get the put, everybody had thought that, right? And so the whole thing turns around, and now you're like, oh, yeah. But sometimes one of the
Yeah.
times you're gonna have it go in your direction, and it's gonna feel great, and then you start to learn that. So I think there's you can get into some really cheap stuff for learning. Uh,
Mhm.
a lot of people recommend paper trading, but I don't really recommend that. I don't know how um,
Yeah.
to get around recommending that though, because there's like a fiduciary duty. I'm not a professional RIA or anything, but I think you learn so much more from playing with real
When
money.
your emotions are involved.
And
Right.
I think,
Right.
and you can get into an option for $5. You know, you could play with out of the money lottery ticket options for $5 on some things, $10, $20. And
Yeah.
that's enough learning right there, because you need to learn like how long does it take to fill your order? How come my order is
Mhm.
not filling? Oh man, I need to like buy the ask. And then all of a sudden you buy the ask and you're like, holy crap, that cost me like $100 more than I expected to pay. What the hell just happened? And you're like, oh yeah, because the spread is so wide. So this option must suck or something. Maybe that's why it's cheap. And like you just gotta learn everything. But those are just
Yeah.
like the mechanics that you need to learn. It's like how to start your car and turn on the windshield wipers, and and turn on the blinker when you turn and all that. That's what all that is. You just got to learn that stuff. It's really not that much. But where you make the money is when you hit the gas pedal and you start driving, and you get in a position and you let it play out. So you can day
Right.
trade an option, or you can swing trade an option. And there's really not much more than that, because options max out at about 2.5 years.
Okay.
And most investors would call 2.5 years still medium term, like not long term, a swing trade.
Yeah. Yeah. Okay.
So, but a lot of people have questions about like, what's it like? So you're trading the options, like, what the heck? It's a different price. The best way I can describe it, and I'm going to illustrate it here,
Yeah.
is like this is I'll pull up something else that we're familiar with, let's say, but not too expensive. Well, now that could be Apple, because they split.
Yeah. More affordable now.
Yeah, $113. Boy, it held its price today pretty good. So let me move that to the right. How do you, here we go. And then this, okay. So Apple's $113 if you buy the stock per share. But if you buy the option, you could buy, for example, let's just make it easy math, the 100 strike.
Mhm.
So when you buy are you familiar with a little bit of that?
Yeah. So strike price, the option one contract is 100 shares, right? So you multiply
No,
by
no,
100.
no. Like it'd be like the 40 strike or the 25 strike. That's not the number of shares.
Okay, so strike is the price, and you compare the strike with the current price of the stock, right?
Yeah,
Uh,
essentially. And here's the best way.
okay.
I can explain it in a really good way. The
Okay.
strike that you get, whatever strike that you choose, it's like buying that stock from that price up. So it's
Understood.
like you're
Okay.
going, okay, I want to own Apple from 110 up.
Okay.
I want 100, and when you buy a contract in options, you do know it's 100 shares. So I want 100 shares of Apple from 100 up. So obviously, if the price of Apple right now is 113, then it's
Mhm.
probably going to cost you $13 a share.
Okay.
Isn't that easy to remember?
Yeah.
That's so easy. Whatever the strike is, it's like you're buying it from there up. So if the stock is 113 bucks and you buy the 100 strike, you're going to pay about $13 a share. So for
Okay.
100
So that's like
contracts,
$1,300 one contract, right?
so one contract will be 100 shares, so that'd be $1,300.
Okay.
Yeah, so now you're getting it.
Right.
But now that's how much it would be if someone were to give that to you right now and then it expired in a minute. But if you
Right.
want it for the whole day and somebody gives you that, you got to rent it to them for a little bit more than the current price. And that's called the
Got it.
premium. And that's
Okay.
called the premium. So if you rent your stock for like a week, it comes with, some rental price, the premium.
Yeah.
So it's
Right.
going to be $13 a share plus a little bit.
Got it.
But if
Okay.
you buy it for a year, that's a huge long, you're going to have a lot of rental fee in there. So that's going to be like $26 a share.
Ah,
And then if the price of the stock is currently 113 and you're buying the 100 strike, but the price of the contract per share is 26, that they're charging you $13 extra per share just for time, for renting time.
okay.
And that's really important because if if the price of the stock goes down, let's say Apple goes to 100, now you
Hmm.
would think that the price of the option would be zero,
Right.
but it would be zero. It would be, but it has some time left. And remember, it had like $13 per share worth of time on it. So actually, even though the price of Apple went down to 100 where you bought your strike, your option's still worth however much time value is left, which might be still about, like $12.50 or $13 per share. So that's one of the really cool things is that when the price of a stock goes down, if you've bought a lot of time, you actually don't lose a lot of money. It's kind of cool.
I
It's
see.
like the time becomes like your insurance because it's
Yeah,
like
I see. Yeah, that's what they call the extrinsic value, right? Intrinsic value, and is that the
yes,
correct the term? Yeah.
yes, exactly.
Okay.
Yeah, I'm gonna
Okay.
put this here so I could be looking more at you. Okay, there we go. So
It's
yeah,
kind of
you got
making
it.
sense to me. Yeah.
Say again.
It's kind of making sense to me
Yeah.
after you. Yeah.
Now, if you buy a strike price that's around the stock price, that's like right up at the
Mhm.
same price, like 113 strike, that's called
Right.
at the money.
Right. Okay.
And if
Okay.
you buy it at $100, like I said, 100 strike, you're buying a lot of intrinsic value, and that's called in the money option. It's already in the money sum. It already has
Right.
some stock in it, you know.
Right. Right.
Or you could buy like $120 strike, and that would be
Okay.
considered the out of the money strike. $7 out of the money.
Yeah. Yeah.
Now, the thing is, when you buy an at the money strike or an out of the money strike, all of the money that you're paying is for rental fee.
I see. Okay. Okay.
So that can be bad if you hoped to preserve your money at all if the stock were to go down. Because
Hmm.
now, you're starting at zero with intrinsic value, and then the only reason it had, let's say, $13 of time value was
Yeah.
because it was probable.
Right.
But if the
Right.
stock price goes down, it's less probable that it's ever going to get to that price that you asked for in the time. So now the rental fee to take that is less desired. Nobody wants it, so people bid the price down, and it's all mathematically formulated.
Right.
And the price of the rental fee goes down too. And so that means if you owned it, now your resale value of that rental fee is down. So
Right.
that
Right.
sucks. So one of the ways you can preserve your capital when you invest in an option is to buy it deeper in the money. Because when you buy
Okay.
it deep in the money, you're buying actual stock price in there. And
Right.
if the value of the stock were to go up, your original capital is 100% preserved. If the stock went down, the time premium still could pad it a little bit to the point where it still equals at some point how much you
Right.
paid. So you actually
Right.
get, and when the stock price goes closer to your original strike, it actually
Hmm.
grows rental fee value, time value. So
Okay.
it's strange, but it actually grows theta value. So if you buy that 100 strike, which is a little bit in the money,
Yeah.
um, you get a lot more capital preservation. And here's another thing, because it's so far in the money already, people don't charge you very much for that rental fee.
Okay. Makes
Uh,
sense.
there's less theta value. So like if you were to buy the 100 strike of Apple and it's at 113, you might pay $2 per share for a half a year of time value on that, and $13
Oh,
of intrinsic value. So that's 15
right.
total dollars per share. But $2 was the time value. But now, if the stock price goes down to 100, okay, but hold on. But at 113, if you were to buy the 113 strike, it would not be $2. It would probably be for a 6 months. It would probably be like $15. It would probably be almost the same,
Same.
fifteen
Yeah.
dollars,
Double.
except it would be all time premium.
Right. Right.
So now here's the interesting thing: is when the stock price goes down to say 100, your strike,
Uh-huh.
your option won't be worth $2 down there because at the money for 6 months, the typical rental fee is like $15. So down there, it will have grown a lot of theta value, but that's only if it still has a lot of time left.
Understood. Okay. Okay.
So in the
Makes
first
sense.
like 25% of the period that you buy, if you bought a long
Right.
period, let's say 2 months, 4 months, 6 months, and you're within the first
Yeah. Yeah.
25% of that period, you get a lot of protection on your money because of the
Right.
time. It's almost like that
Right.
that duration gets wrapped into the current value. And even if you intend to hold the option for a week or 3 days
Yeah.
or two
Hmm.
weeks, it's better to buy like a 4 month option because that safety factor.
Right. 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 Right.
Because you know that if the shit hits the fan and the stock goes down, yeah, you're going to
Mhm.
lose value, but you're going to gain a little bit of padding from that time that came from the end that you could still sell to people. But you
Understood.
don't get that
Okay.
when you buy already full value. At the money is already full value time rental premium and no
Yeah.
intrinsic value. And then out of the money is where it's unlikely, and so people are selling it for less time value and cheaper, and there's no intrinsic
Yeah. Yeah.
value. But for
Right.
sure, if the price goes against you, that's going to evaporate. So, so there's
Yeah.
no protection in at the money and out of the money options, but in the money options provide you with protection if you choose duration.
Yeah. I can see it's like more like you want to preserve your capital as much as possible, right?
Yeah, and I think,
Um,
and not
Makes
only
sense.
that, here's an interesting factor. Have you heard of what delta is?
No, I just today find out. Like I used to hear these terms, but they really didn't mean anything to me before because I never even tried look into options. I know how to buy a stock and sell a stock, like simple vanilla trading, right? But options always sounded very geeky to me, very scientific,
Yeah.
complicated.
And they always
So
do
I
that
never
too. When they
tried
try to,
taking.
when they're explaining it, when most people explain options, they explain it so academically, and it's just too much like calculus.
Yeah,
But
right. And you
you can use
explained it very,
options like a
very
cowboy.
layman in terms.
You
Yeah,
can just like pull out an option, and just make money, man. Because like, um, you don't have to fully be a math wizard to be okay
right,
with options, but it helps. Being good with math
right,
helps in the
right,
stock market. It helps in those kinds of things.
right.
But you don't have to be such a genius at it. So here's some things to think about, though.
Yeah,
There are several qualities that an option has more than stock because an option is two-dimensional, whereas stock is only one. It's line. It
right,
can go up or down, and then
right,
it's over time. But options are over time too. But in any way, an option, because it expires, it gains the dimension of time. So it's two-dimensional. And so because of that, it has several qualities that they measure, and they're usually in a particular sensitivity to either time or price. And actually,
understood.
there's another factor of how chaotic price is, which is volatility.
Right, right,
The more volatile, like Tesla, the more volatile something is, if something can go like this, then maybe by random chance it can go and go way up high. And so that means a person who's going to sell you a bet on that is not going to give that to you cheap because they know there's a
right.
possibility they could lose money, so they sell it to you for expensive. So Tesla options are
Implied volatility you're talking about, yeah?
say again.
Implied volatility you're talking about, yeah?
Yeah, that's right. And well,
Okay,
and implied volatility is kind of can be based on historic volatility and
okay,
the pricing of options because maybe a news item came out and then suddenly the demand and the supply has changed a lot and it spreads things out and that creates implied volatility. But the historical volatility is the volatility that happened in the past.
understood.
So, but overall volatility is volatility. So that's what I am talking about. But there's several factors in an option, and one of them that probably the maybe even more important than the volatility, although that's almost of equal importance, is delta. And so
Oh,
delta is a number that you'll be able to find on your option whenever you're looking at it. And when you look at options chains, you can choose the option you want. In the columns, you can show the Greeks or delta, in different things. Delta is one you want to learn because of this. At the delta is however much the stock moves for each point, each dollar that the stock moves. This is how much the
mhm.
option will reward you.
Oh, okay.
So at the money options, delta is typically about zero point 0.4, which means for every dollar you get 40 cents,
Got it.
and it can be around zero point 0.4, zero point 0.5.
Okay.
Now in the money, you can start to find that go closer to like 75 cents, 80 cents, which
Oh,
is
okay.
much better.
Right.
And another thing is, if you buy that strike and the price goes up, There's another factor behind the delta called gamma, which says that as the price goes up, the amount you'll get paid per point is going to go up too. So you'll start at 80 cents, but if it goes up $10, the stock, by the time you start seeing gains on your option, you might already be getting 90 cents per dollar. So if you start, that's why I recommend people start at about 75 delta, because even 65 or 70, because by the time it goes up to where you want, you're already getting 85, 90 cents per dollar.
I see.
But if you start at the money at 40 cents per dollar, number one, you've bought only time value, which you have to beat back, by the way. I'll have to show you that later. There's a little bit of a problem with that. Time rental fee has to be overcome as well. So, but at the money is about 0.4 to 0.5 delta, and out of the monies can get down to 0.2, 0.1, 0.05. So out of the monies are real lottery tickets, and they call them that, you know. But they're kind of attractive because they're so cheap. And so you could buy 100 contracts of, say, not Apple, something that's a little less probable, maybe Dell computers. You could buy Dell computer out of the money option at like 80. Right now it's, I think, at like 66. For it to be at 80 in a week, it might cost you $5 per contract. And so 100 contracts would be $500. So it would be a bit of money, but you just picked up, you're holding 10,000 shares of Dell. If for some reason Dell comes out with news and it goes to 90, you make 100 grand.
Yeah,
because
I can imagine why they call it.
Yeah, because from
it has some sort of catalyst or maybe an insider.
What?
I'm like, either it needs some sort of catalyst or maybe you should be an insider to trade like out of money calls.
Yeah, but you can see why they call it a lottery ticket, because it's like you're scratching it off, and if it doesn't win, then you threw away the money.
Yeah, exactly.
Whereas an in the money option, even when the price goes down, you will still have some of your money, and you can go, you know what, I want to get out, and you take your money and you get like 80, 70% of your money back, which is a lot better than the out of the money option, which was $5 per contract, and now it's 0, and you can't even sell it back if you wanted to.
Yeah.
And then at the money is somewhere in between, you know. So that's delta. Delta's important.
Okay. Yeah, I'm taking notes.
Yeah, good. Okay, and then so that time value is theta. They call that theta, time value. So the time, the premium, the rental fee, that's the theta. Think of that as the leasing fee. You're really, I mean, that's really what it is. You're leasing a stock.
Right.
And you really are. Somebody has to actually have the stock or promise the stock in order to write an option. In order to create an option that you can buy so that you can hold it and have the option to buy the stock in case it ever does, et cetera, et cetera. Technically, they need to have the stock. So you're leasing an option on existing stock. However, except for the last guy holding the stock at the option at the end, like a hot potato, everybody just trades it back and forth until that very last moment. And you know, and it's not even that big of a deal if you are holding it and you couldn't sell it to anybody because they didn't want it because it's the end and it's expiration and boom, and now you have it. Because what will happen is on Monday, you will get assigned that stock and you're going to get that stock. You're going to have 100 shares of that, and it's going to be like, oh shit, because if it was Apple, you're going to get a margin call for however much that is, $112 times 100, $11,000. Let's say you only had $2,000 in your account. You got to put $11,000 in there. There was a kid that like jumped off a bridge or something like 3 months ago because he didn't understand some of this stuff. But it's okay. You can just sell Apple right away. Just sell it. Just sell the stock. Now you're not obligated with the stock anymore. and you can keep going on living. You don't have to jump off a bridge.
Right. Right.
So they don't really tell you that. And another thing is you could buy, you could sell a call if you own the call and you happen to have level 3 or above options level. You can sell a
The
call
shorter call.
at where the price is now, and then the
Okay.
difference cancels each other out. And then on Monday, they don't even assign you the stock; they just give you the money because they did the two
Yeah.
sales with real stock and
Right.
boom,
Right.
and they exercised them both.
Kind of
Except you
you
will
hedged
pay
it.
an exercise fee for both of those, $35 here, $35 there. So,
Okay.
but it's not a big deal. It's not like life threatening, and it's not that big a deal.
Right.
It's
Right.
much more worth the risk to try and trade in options and accidentally have that happen and have to pay 35 bucks or sell the stock on Monday than not, because the amount of money you can make on options is fantastic. It's
Yeah.
way more than $35.
Right. Right.
I don't know. Did you get
Yeah.
a chance to look at a lot of my wins history?
I was going through today. I didn't really go through everything, but it's pretty impressive what you could do with options. Part of the reason I wanted to do options so I can get out of the small cap world and look into the large cap that I cannot
Yeah.
normally buy. So now I can play, SPY. I can play in large caps,
Yes.
and based on my bias, where I think what the stock's going to do over the period of time, I can, either get a call or put based on where I'm leaning with my bias and try to swing it. And like in the small cap world, I don't really like to keep my shorts long. I'm an intraday trader, so but with option world now, like I can see like some stocks I would want to keep my put, right? Like
Right.
swing the put. So I think option, may potentially give me that opportunity where
Absolutely.
I can play like
Well, yeah,
longer.
except that those options can be expensive too.
Yeah. Right, right, right.
I bought it
Well, I
off. I
mean, where
bought
it
one
would make sense.
contract on Amazon on Thursday. I bought one contract, just one contract on
Right.
Amazon on Thursday for until December. $60,000.
Oh boy.
It's unbelievable. I expect it to go up enough that it will
Huh?
make me about 20 or $30,000 in the next 3 weeks.
Right. Okay.
But it takes money to make money. But there are some stocks that you can buy, like Dell. That's a good example. Um, for 100 contract, one contract might cost you $250.
Okay.
And if it moves in the wrong direction, maybe it will be worth $100 by the time you're like, oh my god, and you sell. Or you can keep it. Maybe you have enough money that you can just let it keep going because maybe it will go up. But if it goes up, then you will start to increasingly get closer to almost $1 per contract share that you have. So $100 for every move. So Dell's at like 66. If it goes to 72, now your $250 might be worth like $900. So that's really good.
Out of leverage.
Because it only went up like 6 points, but
Right.
$600 plus 250 is 850 bucks, something like that. And that happens, all the time. I think something that's really important is that you always got at least 5 to 10 positions going, because there's a lot of probabilities and a lot of odds. And if you have 10 going, and let's say the odds are that 3 out of 10 will make money,
Right.
then you don't have to wait 10 months, let's say if you did one option every month to get those
Yeah.
three. You can see which ones are ahead and you can go, oh, these other ones are losing. Let me cut those. Let me keep those
Right.
going. And then one of them might blossom into a mega hit. You don't know. One out of those 10 might do really good. And then all three of those pay for all 10 bets and
Mhm.
maybe doubled your money so you could do it again and now you've got more money.
Right, right, right.
So it's a good
Yeah.
idea to do quite a few. Um, I probably, right now, I have a smaller amount of options running because recently I went to all cash because I was ready to buy all this stuff up. And I bought a few things in the last few days, and I have maybe 8 positions running, maybe 10.
Okay. Nice.
Uh,
Okay.
but I like to have 20 or 30, sometimes even 40 if they're long term and they're nothing crazy. Maybe it's just like the financial sector ETF XLF, something that I know is controlled and I don't have to go, oh my God, I forgot
Right.
about that. And then, like, where's my money? So,
Sure.
but you can plant those seeds. And I'm going to show you something now if you have more time,
Sure, I do.
of a way that this is my strategy and my method, my primary method, my primary strategy for making money with options is you find kind of like this variance path in a channel. So if you look at the Apple chart here,
Yeah.
you can see that essentially, at least for that long, it was, I don't know if you can see that very good. That's kind of a bad color.
Yeah. I can see it.
You can see it good. Okay, well, it followed kind of a channel,
Yep.
right? A channel, a width, and I put that way too low. It was probably closer to something like that. And again, it's a little bit hard to see. I'll try zooming up a little more. But and now lately, it did something maybe a little bit closer to. Let's try that, right? So something like that. Yeah, that's pretty close actually. So here's the interesting thing. If somebody bought Apple back here, it would have been,
Mm.
pre-split or post-split prices, it would have been $60. And then if they kept holding and holding and holding until, approximately yesterday, they'd have doubled their
Mhm.
money. So 100% return. But if you notice, every time Apple came down to the bottom of the channel and touched, within a certain number of days, it went up to the top of the channel and touched. So in this
Right.
case, 21 trading days, it went up 21%. And if we keep looking for that, here was another time where somewhere around here it got close to the channel. Hopefully you pulled the trigger and you bought, and then what does it say? Oh no, it says I have a 40. Oh good, they removed. Apparently on the free plan, Zoom only lets you do a 40-minute meeting. Okay, anyway,
Okay.
so now on this next run, it took 26 days for Apple to go up 18%. And then it pulled back again right to the bottom of that channel. And then I pretty much call this one the top.
Yeah.
In 8
So,
days, it went up 12%.
yeah.
And then in 14 days, it went up 13%.
Yeah.
And you probably would have bought somewhere around here and discovered you probably, I would eventually teach you that this candlestick here is one that you would not sell. You would wait to the next day because it's going to go up. It did go up. And then you would probably sell somewhere around there. 11 days, you made 18%. It pulled back. It's starting to create a new channel. Hopefully you get in somewhere around here. And you're super happy right about there. You make 13% in 10 days. And this keeps happening. And that's perfect for options. Now, if you add all those up, let's go back. Did I start at 60, 66? So let's get one more right before that. So like this one to this one. Okay, 20%. So let's take, I don't know if you only see my window. Do you see this thing, this spotlight search? No?
I do not, but yeah.
Okay, but I'll tell you. I'll tell you what it is. So I'm just doing addition now. So let's take, $10,000. Let's just do $1,000, and
Uh-huh.
we get that first run there. So we get 20%. Now we have $1,200. Now this next one, we put the $1,200 and we get that, and we get 20%. I don't know if you can see that there, but that's what it is. Now we have 14,440. And now we plant the seed again, and in 26 days we get 18%.
Mm-hmm.
So now we have $1,700. And then the next one, in 8 days, we get 11%. You could almost do a compounding, but then I'd have to get an average return. But all right, 1887 we're at, times the next one, which is 14 days, we get 13%. So now we're up to 2,141. And you can already see my point proven, but in 11 days we get 18%, 2141 times 11819 approximately, 2547. And then the last run recently that you could reliably have bought on a pullback and then sold at the top was 10 days, 13%. And so now you have $2,888 from $1,000, which is 188% return. So, and your money wasn't invested the whole time. Probably between then, you might have been making some money on SPY or something like that. If you go to Amazon, well, I'll do it. I have it already marked. Look, I already have the markings for Amazon. In the last year, Amazon went up 102%. But on top of that, it had 15 of those moves, 15 that you could have got in. And if you did, the total amount of money you would have made was 740%.
Wow.
But that's on stock. If you bought the option for the same amount of money, you would have received many more shares, many more, probably 5 times as many. So you would have got 5 times 7, 3,500% return on your capital.
Wow, that's
So what
that's
I
quite,
do, yeah. So
yeah.
what I do is I identify stocks like Amazon and Apple and Microsoft and Lulu and a lot of these stocks that are on these beautiful uptrends, but do that channeling that go up and down, but they're not unreliable and they're stable. I
Mhm.
find those are like premium stocks. And then
Right, right.
I just do this every time because Amazon did that 15 times this last year with 100% certainty. It never failed. And it just happened again. And that's why I bought Amazon for $60,000. And I expect to make about $20,000 or $30,000 on that within the next 2 or 3 weeks. Well, if
No,
you
it makes
do that
sense.
on
You
like
have
10
to
or
back
20 stocks at the same time, and maybe some don't work out because that truly happens, but if
yeah,
15 out of 20 do, you're doing great.
yeah,
And that's my
I can see
strategy.
that.
That's how I've been making money.
No, it's a very good strategy, very profitable, and obviously, why wouldn't you do this? It makes perfect sense. And thank you for sharing this. Um,
Sure.
it, it definitely, options making sense to me. To be honest, I want to learn. As a trader, I also want to evolve now, go beyond my comfort zone, what I know, and I want to be like pretty much not a one genre trader. I want to make sure that I understand other concepts as well, and able to trade those. Like you said, my goal is very simple. To be honest, just want to be vanilla option trader.
Yes.
Long or put. Uh, and see how it goes slowly and steadily, like try to evolve into learn better things. And just now I have you as a mentor. I'm very glad I found you. I saw your tweet on Twitter,
Nice.
um,
When did you see
or the
it?
week. Friday, I think. Yeah,
Oh, great.
Friday. I was. Yeah, so I follow, like, I'm a short bias trader. Just to let you know, like, I do long, obviously, like
Okay.
you have to.
Yeah, yeah.
But yeah, mainly like I'm on the short. I'm very short bias trader. So, and it works in small caps, right? A lot of pumps and dumps, and uh, they all go back where they started, right? And some things are pretty obvious, right? In a small cap world, that you know that you see the exhaustion, you see the pumps, you see the PRs, that you know that, you know what, this is it. You know the end game.
Yes.
But I was missing this, like, how do I do and play large caps? So option was in my mind, and I saw one of the guy I follow. He posted a Netflix option tweet one time that was showing some crazy 3,005 or 4,000% gains. And I was like, oh my God, is it even possible?
Yeah, it
Um,
happens. I mean, that's another
I
reason why I
told my
like to
friend,
do 10, 20, 30, 40 positions at any time because sometimes, one
yeah,
out of 100, uh, one of those options will just explode. Like, I think at one time I made, there might be a posting where I made
uh,
7,000% on one option.
wow.
Hey, Rhoda.
Hello. Right.
So yeah, so yeah, I think it's a really great way to go, and I think that, but I would say that you're going to find shorting less effective on big caps, and you've probably been told that.
Yeah. Yeah. Yes. Yeah. Um,
It's more dangerous, and especially don't short like what I just showed you. Those stocks are strongly trending up, but
Never
pick
go
something
against
that's
my.
all over the fucking place, like AT&T
Yeah.
or something. There you go. There you go.
Yeah. No, what you just said. You see, my computer here. I have a sticker that says "Trend is your friend."
Yes.
So
Always go with the
no,
trend.
yeah, yeah.
Like look at the and I'll show you something else. Just 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 how to identify good stocks. Look at Microsoft
Mhm.
over the last, so many years. And even if I
Oh,
put it on logarithmic, you can really see that. That's just straight up. Very little variance. And whenever it goes sideways, it it has no problem recovering. Lulu, hi.
Noah. Say hi, Noah.
Lulu is
Hello.
another good one.
My 1-year-old likes to walk into my office every time. See, he's saying hi.
Hello. Oh, wow.
He's looking at the screen.
It looks like he
See,
has
don't.
a mohawk because of the door.
Yeah.
He's a punk rock kid.
Yeah. Mommy, can I go to mommy now? Sorry, sorry, guys.
Okay. Hey guys. All right. I muted you while you were gone. That's fine. Rhoda, I don't know if you're showing me something, but I'm seeing some photos. A lot of cool stuff there, as a matter of fact. She muted her video. I was like, man, that's good stuff. A laptop, and I don't know, I can't tell from the little picture. But yeah, let me show you something else too. So that's a good stock. Microsoft. Look at Microsoft. To me, if you look at it in the very long run, all you see is progress. All you're seeing is progress. And if you go to something like, let's just do AT&T, I can't. That's not a good stock. See, look at that. I mean, what can I rely on that? If the shit hits the fan, which way is that gonna go? Fucking down, probably, but it's certainly not gonna go sideways. and I'm certainly not going to be able to wait it out because it might take 5 years for me to get my money back. But Microsoft, in the same period, man, what a safe place to put your money. So that's how I also pick my stocks for the options trading thing, is I make sure that they're companies that in the worst of times, they're still going to do good business and they're still going to be there. So in case I got in like last week on Thursday, I can rely on the fact that in a couple weeks or a month or two, we'll be back where we were. Even in the worst hit moments, you know. Let's see. So another thing I'll show you guys while everybody's here. There's too many lines on that chart. Let me go to a more clean one. Let's see. Not Apple, not Microsoft, maybe Facebook. Let me see how many lines I got on that. It's a little hard to see. What's a big stock that's been trending lately? Yes.
Like Microsoft?
Well,
Or
yeah, but I think I had too many lines on there. I want to try a different chart.
I'm trying to think what I have on my watch list.
I have a massive watch list right above my screen. Let me see.
Oh God, I have so many. I think
Yeah.
that's my problem. I'm in the morning. I'm looking at so many. I think I need to just focus on. How about QDEL? I've been wanting to ask you about QDEL.
Oh,
Quidel.
I found a good one that I'll probably use in
Okay.
another illustration. But what's the ticker?
QDEL.
QVEL?
No, D as in David.
Okay,
EL.
that's what I thought you said.
Yeah.
QDEL. I have not heard of this company. So yeah, I don't like that chart at all. I mean, that's like, God, why does that look familiar? Somebody just asked me the other day.
It's a healthcare. It's a healthcare stock.
She asked me today about a stock. It looked exactly like this. It dropped, or maybe it was yesterday. Anyway, yeah.
Which one? Yeah, let's go back to your other one.
I
Your
mean, I would
example.
short this. It's in a downtrend and struggling and having problems ever since. What, are you sure you didn't show me this the other? Man, this is exactly
No.
like another chart I saw.
The reason why it's on a downtrend is because of Abbott coming out with that $5 testing kit or something like that.
Okay.
Like the really cheap testing kit.
So this is a biotech, or
they have a test kit that got approved back in May. That's why their stock shot up just so crazily. And different COVID-19 related catalysts.
Yeah.
And then
Yeah, that's not a
they go
stock
to earnings.
that I find worthwhile for any swing trade.
Okay.
Except for maybe to short it.
Okay.
Short it down to 100 maybe.
Yeah.
I mean, I don't see support till like about 105. And it definitely just recently broke support and
There really aren't any, the volume for the options is not that many. That's why I was like, I don't think it's worth it.
No, yeah, probably stay away from that. But all right, let me show you something interesting about options, guys. You missed a lot of
that was one of my question. Even like, do you guys have any criteria like how much volume options should have? What should be the open interest? Do you guys track those things before you get into the?
Yes and no. I mean, basically, you start to get a feel for what's a good amount and what's a bad amount. If you're looking at the bid and the ask and the spread is really wide and there is volume and open interest, then there's something wrong. It shouldn't be so wide. So there's kind of like a three-factor there. You have to look at, and I've even seen some things where there's been volume and interest, but the delta doesn't seem to match what it should be, considering the price I'm going to get. That's like a little bit more advanced. When you start to really get good at options, you'll start to see some of these strange discrepancies. They're rare, but there was like a case recently, I think a week or two ago, where an option pricing was so bad, and this is really rare, that the option price was so bad and yet there was liquidity. People were buying the option at the poor price, that it was better risk to reward to buy the stock. That's very rare. Almost never can you beat the risk reward of an option with stock. It just doesn't make sense. Anyway, so let me show you something here. So, okay, but to finish that up about liquidity. So liquidity is like the third factor you want to check when you're trying to get into your option. Number one is the strike. Well, there's four. Number one is the strike. Number two is the expiration or the duration. Number three is the delta, so important, like I told you before. And number four is the liquidity. And now, so for the liquidity, you just want, so I tell you guys to get the 75 delta, but I'd rather you get a more liquid strike nearby. So I've picked up 55 delta, 60 delta, just because the other deltas had 5 to 10 times less the open interest and liquidity than the one that was like a little bit closer to at the money and had 60 delta, and but it had a lot, like thousands of volume and open interest, and I'm like, oh heck, I'm going to go there, because when it comes time to sell, you don't want to be left hanging dry. You don't want to be the last potato, the last person to hold the hot potato. Yeah, your mic is muted. I don't know if that was automatic.
Yeah, sorry. Yeah.
So liquidity is that you want to see volume and open interest. If you don't see volume, it should have a lot of open interest though. And open interest means, as far as I understand, I mean, I have to go learn more deeply about open interest if I wanted to find out any further intricacies about it. But as far as I understand, open interest means this is how many people have been written a contract and are holding that option. They've already traded
the
it.
Open position, basically.
Yeah,
between buyers and
but I've seen some peculiar things. Like I've seen volume higher than open interest, and I suppose that means people are trading back and forth the same contract, possibly. So you can't always get the full amount of information from those two numbers. All I look for though, because when I'm going in for something, I'm just going in real quick. I literally pull up the options chain, I find the duration I want. So now I'm looking down the options chain for the duration I want. I'm looking through the strikes. I'm trying to find where's that 75 delta, and then I'm looking, okay, what's the liquidity? This one looks good, and I grab, or I see something, there's nothing attractive. So then I go, okay, what if I get one closer in expiration? I check that, nothing attractive. I go one farther, I check that. Oh, okay, the Januaries, because they're the yearlies, they've got some more liquidity. All right, I'll get that. That looks good, Or I'll abandon it. It's better not to get into an option if it's not that liquid. Just don't get in it. Just save your money for another day. Because the only way to get out of an illiquid option is to hold it to expiration. And again, that's okay. Like I told you before, you can exercise the stock and then sell it on Monday. But, it kind of like messes with your cash to settle time and all that stuff. So
yeah,
it's not too great. But yeah, did you have another question, Rhoda? Anybody?
Yeah, for SE, ticker symbol SE.
That's a good
that
one.
was I hesitated on that one, especially when it went down to like the 137-ish.
Yeah.
I hesitated because I didn't see any volume.
Yeah.
I was looking at December or January.
Okay.
But I didn't see any volume, so yeah, so I didn't go in.
Okay.
I don't know which one you
well, I've traded SE many times. Here it is. If you can see my screen. And man, is that puppy profitable. So look at sashimi.
Oh, is it?
Huh?
Is it?
Yeah. Because every time it pulls back, it goes up a great amount. 32%, 25%, 34%, 28%, 38%, 35%. And so recently it did the pullback again, like the entire stock market did. And we're hoping then it will go an average of about 30, 30, 35%. So right now it's at 138. We're expecting a profit target of about 185. So that's where it could go to next. And if you bought multiple contracts, you could even scale that out, 165, 175, 185. But
Well, did it stay at 137, 136 range, or did it go
it's
up a
at
little?
138 right now.
Oh, 138. Okay, so it's still a good entry, right?
Yeah.
Yeah, it's making higher lows. Look at that, your channel showing it's
You
making
see it
higher
now?
lows.
See, now he knows how I label my charts, you know, and because I taught him, you missed it, Rhoda, but I showed him how I do this channeling technique, and but you can see it. It's pulled back to like the bottom of a range that it channels in, and
Mm-hmm.
you don't get these opportunities often. As you can see here, in 1 year, it happened 1, 2, 3, 4, 5, 6, only 7 times. So your opportunity to get into SE comes only once every month and a quarter, every 5 or 6 weeks. So you can imagine, you know, and that happens to be one that's like a superpower, man. You can make so much money on that. That's one that I always want to make sure I get into. And I didn't the other day because I bought Amazon. But that's because Amazon is the number one to get into, and Tesla the other one. Unfortunately, Tesla is getting its ass kicked right now. So out of all the times this year that it was a good performing puppy, I get in now, and you know, we're gonna get hit. But I think it's gonna come back no problem to at least break even, and if not some profit. I think we'll be surprised in a couple of
I
weeks.
think a lot of profit taking place in Tesla.
Yeah, I mean,
And
so
the
Robinhood
that
people.
negative news, the catalyst didn't get added to S&P was a
Yeah, Robinhood investors are not investors. They're short-term people who freak out and
yeah,
they sell and
yeah.
then they throw their phone and break their phone. That's what kind of investors they are. And they're in it for a day or as long as it's profitable. They have no stomach at all. They're not investors. So there's this whole, and you can see them because anytime an earnings or an event is coming up, you can see where it starts to take off. All that move, all those people, probably 80% of them are just Robin Hooders, just
Wow.
piling on. So you can count on them in any panic moment on just when I'm day trading. I don't know if I mentioned this in the room before, but when I'm day trading and you know, the stock starts to panic, I don't know why, but I imagine like a roller coaster screams in my ear. So I start hearing everyone screaming and shrieking in shrill pain, you know, and I'm like, yeah, keep it going, and it's like you're entering the vortex of hell, you know, and uh, and that's what just happened in the last.
I love buying the panic. I love buying when it's red.
Mm-hmm.
I did the same. I told you about my AKBA position, 70, 75% down, everyone's running. I started accumulating.
Say that
I'm
again.
still holding.
Oh yeah. You said yeah.
I'm still holding. And I
Yeah.
told you, right, I'm gonna hold till November. They have earnings.
They say
I don't
don't.
like playing earnings game, but my goal is to before earning they have a tendency to release a PR, and they have pre-NDA meetings, their FDA schedule. So it's a very calculated move.
Yes.
And this is the 5-year low. It's below 52-week low. I'm like, there is no way I'm letting this stock go.
Cool. Let me show you guys something now that I got your attention on the whole option thing. So, what I mentioned before is the difference between at the money, in the money, and out of the money. Now, I've never seen this, and I'm completely self-taught. Although I've went through college and I've taken even courses on the internet and stuff on finance and all that. But uh, because of that, I develop a lot of my own strategies and my own systems for things. And I've got my own way of visualizing an option on a stock chart, and I think it's pretty cool. So, for example, I'm going to pull up also an option chain so we get realistic prices here. So, hang on. Well, where would I get that from? I think I quit TOS, didn't I? Did I quit TOS? No, I still have TOS. Okay. Are you guys able to see TOS at all? If not, that's all right.
I'm switching over to my laptop because I can barely see it on my phone. Can
Okay.
you, it says,
Good.
please wait, meeting host
Artist.
will
Yeah, I
let you
will.
in.
Sure.
Okay, thanks.
Sure.
Oh, Aurelia is also asking to be let in.
Oh, what? I clicked admit. Oh,
I know,
weird.
her microphone is muted.
Okay.
Yeah,
Okay, I'm
perhaps
leaving
you
the
need to unmute
phone.
her.
Oh, yeah, but okay. Asked to unmute. All right, well, I think should be working now. Okay. All right, so I pulled up the option chain on EPAM. That's this stock here, which, by the way, I mean, now Sachin probably can see why I love it so much. Look at
Yep.
that beauty. I mean, that's reliability right there. But there's not a lot of entries. Just here, when it touched this orange line, here,
Uh-huh.
here, here. But every time, by God, within just a couple of candlesticks, you can rely on the fact that it's going to get to the top end of that range. So,
Yep.
which it did recently. So here's how you can visualize a option. This is so cool. So let's check out the October 20 at the money expiration on EPAM. At the money would be about $16.50. So that means that you're paying $16.50 for the 310. Okay, 310. Let me pull up this puppy. Okay, so this is the current price. You're like right now you're buying it for $16.50 a share, or $1,650. And by October 20th, if it's at 310, if it's at 310, that's the strike you bought it at. So that means you lost all your money, $1,650. So you need it to be actually $16.50 higher than your strike price by then.
Right.
So let's plot that. So 310 plus 1650 is 326.50. So now let's draw a line all the way up to there. Okay? And now here's the thing. Now you go down to the bottom where the strike is, and that's where you have zero money. And then you make a parallel line to where you just bought it. Okay, whoops. All right, so that represents your capital. That's your money. That green zone is all your money. If the stock price comes down on this day, halfway in, it's exactly where it is now, 310, you'll have lost 50% of your money. Because it's 50% down on your capital in that zone. So when you buy at the money, that's one of the real problems. So that's an at the money option. What you're looking at right there is you have to constantly be gaining just to even be broke even. If you're not at 326.50 by expiration, which is up 16 points, then you don't even break even. If you want to make money, let's say it goes up to 336.50 by expiration. That means you made $10 per share above what you originally paid a couple weeks ago. But the thing is, it doesn't have to be at 326.50 for you to made that same $10 per share earlier. It only had to be like by this day, if it's at 311, 321, right there, you'll have made the same amount of money as if you had waited all the rest of that time for it to go to 326 by the October 20th. So that's one of the reasons why if you buy an at the money or out of the money option, anytime you have a good gain, just get the fuck out right away, because you can't beat that, because now it's got to stay there along a diagonal path or higher in order to beat where you just got to. That's why you saw another line on my chart sometimes where I might draw like, oh, okay, the price is here right now. That means if it doesn't get above this diagonal line by expiration, I'm not doing any better than if I should have just sold right then. Does that make sense to anybody?
Yep.
Okay, cool. And so that's an at the money option, what that looks like. Now let's take a look at it in the money option. And now that's what I teach, is to try to buy the 75 delta. So let's take a look at which one that would be. And that would be the 280, gives you a 76 delta, and it would cost about $36 per share. So it's more expensive, but take a look at the benefits. So we'll draw it. $36 per share at 280. So you buy it now, so your origination point is from the exact moment you bought it, the current price of the stock. This is just how you draw it. And then by expiration, it's going to be at 280. In order to beat what you paid, it's got to be $36 plus 280, which is the strike, which is 316. Is that right? 316. I think
36
so.
36 and 280, yeah, 316.
Okay, so take a look. That's not too bad. Okay, and now let's go down to the 280 and draw that there, and then we do the parallelogram kind of thing. You give it the same curve there. So now let's see if I can hide that. I wonder if you can hide shapes. Doesn't matter, I'll just delete it. No, I'll change the color. At the money, we'll make it orange. Okay. All right. Can you guys see that? Kind of like make sense of that now?
Yep.
Kind of sucks with the two at the same time. But now you can see some of the benefits of why you buy an in the money option. Because if the price of EPAM starts tanking on the at the money, you may lose nearly 50 to 80% of the value of your option pretty soon. It gets to 305. If it gets down to here in a couple days, 296 on the at the money option, the orange one, you're going to have lost almost 90, maybe 80% of your money. But because of time value, you'll have a little bit, but you'll have lost some. At the money's not so good. But on your in the money option, you'll have only lost what looks to be maybe 40% value, something like that. So that might be enough for you to actually stay in the trade, or maybe that's too much for you because you want your money so you can sell it and you can just get your money back. But you've preserved your capital a lot better in that situation. But more importantly, if the stock does exactly what I said, which was in like 5 days, it goes up to I forget the number we said, it was 10 points higher than 321. Then from 321 in 5 days, following the in the money angle, then by expiration, it only needs to go to 326 to still be broken even. That's just a little more likely. Whereas the other one, from that same point, if it hits there, I'll have to go a little above, at that angle, it would have to go to 337 by that time. I'm going to make that orange so that it corresponds to that. So I'm saying if the stock price were to go right there in like however many days that is, let's call it 5 days, which is 321, that if you have the at the money option, if you don't sell right then the stock price needs to go above this orange line for you to make any more money, any additional money. Otherwise, you're going to start losing money and you should have just sold. But the green one isn't under so much stress. It's like, I don't have to go up that high. I can go a little bit. I can stagger around, and you're actually making money even if it goes up just a little bit, 10% more, you know? So it gives you a lot more.
327 even is still a break-even point, right, for us?
Say again?
that 326, 327 price point at this point is still for us in the money call option. It's a break-even point, right? For
It
us.
happens to be that similar number, but that's just a coincidence. But yeah,
Yeah, yeah.
326 because it cost $36 and was bought at
Right,
280 strike. Just a
right.
coincidence, I think. I'm gonna have to check that. There might be a mathematical reason why that actually is the same number. That by expiration, the at the money needed to be at 320. No, hang on. The in the money does not need to be at 326 in order for you to break even.
Okay.
It has to be at 316
Right, because you're starting
Oh,
from
okay.
here.
80 something.
Yeah, it's better. Uh-huh.
Oh, so yeah, so we are in the money literally. If it's 327, we're making money.
Yeah, yeah, yeah. You got to be at the money. You got to be at 326. In the
Right,
money, you got to be at 316. That's a lot better. Depending on the stock you choose, the
right.
options can be priced such that this in the money rectangle could even be flat, which is awesome. That's basically like buying stock. It's like saying you're not paying any time premium. Anything above the flat, that's your time premium, actually. That's kind of like what
Got
it
it.
mathematically corresponds to. Now, I've never actually done this before. I just visualized it. I've done these squares
I
before,
really
but I've
like
never
this idea
put
to
them on top of each other.
visualize. Like you
Say
add
again?
your premium. I really like this. You add your premium to the strike price, and then you draw the line on the chart, and now you
Yeah.
know what chart needs to do in order for you to make money.
It's such a good way to track. Like if you
Amazing.
go back to Apple on my system, you can see whenever I've held options, or let's see, Facebook. You can see my little rectangle squares and different things I've held. You can see the residue of previous options I've had. But let's try one more thing, which I've never done before, which is now let's also overlay the out of the money option. That might be cool. I've never seen a three-way description of all those. So let me take a look. So let's say we get the 25 delta out of the money option, because the at the money option is 50 delta. The in the money that I recommend is 75. So we should probably be mathematically perfectly trying to go after the 25 delta for out of the money. So let's take a look at that. The 25 delta money out of the money is the 340. The 340 strike, and it will cost you about $500 or $5 a share. So from the current price to $5 a share more than 340, which is 345 by October 20th in order to break even. And you lose all your money if you don't make it to 340. And then we finish up a parallelogram from there. Essentially, that's what we're looking at. And I definitely am going to color that red for dangerous.
What's the stock price, Evan?
The current stock price, it's hard to see, 309.
Okay.
I can make this bigger, watch.
Oh, thank you.
You're welcome. Does that help? Okay. Just tell me that, you guys, no problem. Let's see. All right, and I'm going to go like that, and we're going to put, cool, I'm sure that's really helpful. Okay, and then now let's draw that line from that same point where we theoretically say, and actually this program allows you to put predicted bars on, I think. Let me see.
Even are you using free version or it's a pro version of TradingView?
TradingView, I had the paid version for a while.
Yeah.
I think at that time I just wanted to cut down on expenses, so I cut it down.
Yeah.
I was kind of hoping that I could do chart trading and strategy programming with their Pine script and stuff. So, but the thing is, man, I'll show you guys before you leave my setup. I don't know of another software where I can get as much as I get on my screens. I have 128 symbols on each screen.
I
Charts.
saw that image today and I was like, wow.
So, and I watch all the sectors and oil and the VIX, and it's very informative, and the dollar and the currencies. It's very informative for me to feel out, you know, do I need to be worried or not? Like when SPY was going up today at one point, it was really weird because oil was falling, and I'm like, this just isn't right. And you got to figure that stuff out because there's this push and pull between oil, gold, the dollar, and
I like the correlations too. I always keep correlations chart on one of my screen every time I'm trading because I want to make sure what market is doing, and I'm not doing anything opposite of the market.
oh, son of a bitch. all right, let me try. So I can put fake bars in here apparently. I don't know why I wanted to do this. It doesn't matter. Okay. Okay, so look, let's pretend that's the future, right? Okay, so from here, now let's make a red line to show that if that's the case, what price you have to beat. Like if you don't sell right then and realize, and you start thinking, oh, fuck, man, let me keep holding because if it goes up even a little bit more, I'll make a fortune. You might not even make more. You might wake up the next day and it's up. The stock is up and you're down because you didn't beat the curve. And the curve is it's kind of odd, but this is a visual representation where it inverts theta decay, which is your money decaying, into a price that you have to beat from the actual stock. So it looks like it's going up, but really what's happening is your money is dying. So by the end, you have to get to 350. And let me make that red. So that's the difference there. Now, but look at the size of the amount of capital that you had to invest, though. So there is that to consider. Some people just don't have a lot of money, and they're going to take that high. When they pay very little money to get the out of the money ones, they're taking a really high risk. And if you told, and some of them, this is the crazy thing. If you told some of them are buying 10 or 20 or 100 of these, 100 contracts out of the money. And but if you told them for the same amount of money, you could have got 10, okay, it's 10 times less, but you could have got 10 in the money calls, and because of the delta is 3 times as much, you would have made the same, if not more amount of money for the same amount of money that you invested, and you would have totally have been at way less risk. So it's just absolutely bad to do out of the money and great to do in the money. So in my opinion, it's not that great to do even at the money. So I mean, if Mark is saying to get at the monies or out of the monies, I think he's still behind me in realizing what I've realized, which is what I've just shown you.
No, I mean he can do the at the money because
he's got money to blow.
That and you know that's what he knows. You know, he's comfortable doing that.
That's true. I mean, he can feel it out. Does this stock have a good, you know, I don't know. I still think that
but it's too risky for newbies. So that's the thing. If I followed him today, I would have lost a lot of money today.
And the really bad thing would be if you made money, because what are you going to do next time? You're going to do it again. Right. And it's so difficult to find a situation. It's like 1 out of 10. It's so difficult to find a situation where you actually make money on an out of the money calls, because they're so difficult. They're priced beyond what the contract writers know that the odds are. It's like very low probability. So they're already priced so that you can't make money. So 9 times out of 10, you won't. And that one time that you do, if you got lucky the first time you did it and now you tried it again, and maybe you made $150,000 because you put $30,000 all into this one thing, and you like made $250,000, and you see these things on YouTube, people that do that, and then they go, oh shit, and the next day they're down to 70,000 because they tried it again. Then they do it again. Now they're down to 20,000. They're like, what the fuck should I do? They do it again. Now they're up to 80,000 because they got lucky again. But they never realized that in about 40 tries, I used to be a professional poker player, so that's probably why, you know, I understand the long game a little bit better of the odds.
In one of Tim Sykes' videos, he actually has a speaker that used to be a professional poker player. And I
Uh-huh.
wrote down notes, of what he said as far as how he got better in trading because of that mentality of being a poker player.
Yeah, you got to know when the odds are in your favor, and if they're not in your favor, you got to fold them. And out of the money is so not in your favor. But that said, there are times where it can be really great. For example, let's say earnings are coming up and you got it in the money, so you got some in the money calls. What if you're wrong and the stock goes way against you and like nearly demolishes your in the money calls? Well, if the stock happened to have made a big run right up to the earnings, but your calls you bought earlier, now puts would be really out of the money. It's like, wait, they're like, if you bought some puts way down by where your call was, right now, they happen to be way out of the money. So they'd be like cheap insurance. For almost like 5% of what you paid for your call, you could get maybe 2, 3, or 4 times as many puts at that same strike price. Now, just because the price over the next few weeks changed, and now you can get those options so out of the money for so cheap at the same level. Now you're protecting your original call investment for a really cheap price. So they have utility. You can use them. And that happens sometimes. You're like, oh my God, I was wrong. And then this curve happens and you're like, whoa, in the middle you're not making money, but this price is falling. That happened to me on Melly like 3 weeks ago. And the price is falling, and then all of a sudden it's going up the curve and you're making money on your like 20 puts that you bought as insurance just in case. And I got out for like 40% loss on my option because it was expiration Friday and I did have those puts. If I had a longer duration, I probably would have made money as the stock went down for many more days. But at least I didn't lose my entire call money, which was $7,000. So instead, I only lost like $2,500 because I made $4,500 on all those puts. You just got to know these things as tools, So those are things like, even when I'm day trading, that I sometimes do. Like, what was it? Like last week, I was day trading one of those penny stocks that had options, though. I forget what it was. And started to go against me. Oh, FLDM, I think it was, or FDLM. And it started, yeah, you remember that one? Started to go against me, and I immediately looked up, does this thing have options? And it did. And so remember what I taught you about delta. Delta is how much you get in exchange for 1 point of difference in the stock. So I knew, because the out of the money option puts on the stock that I went long on, but was tanking, because they had a like 0.33 delta, it meant I needed to buy 3 times as many contract shares as the number of shares that I have, so that it would equal, they call that delta neutral, so it would equal my drop. And it totally froze my position. It was awesome. And then as I saw the price definitely dropping in such a way that it would never recover, I just cut my long position. And as it continued to drop, now I was starting to gain money. And then I let that run for like a week, and I think I still have 3. How many do I have left? 3. I still have 3 left, and I'm up $1,260 on just those 3 contracts that are left. So I've actually ended up making money, because you can use options in so many cool ways as tools to help you. You can't do it on everything, though, not those cheap penny stocks. And then sometimes you want an option and there's no options on some stocks. It really sucks. There's opportunities out there where I'm like, oh man, and they don't have options. What a good buy that would have been. Okay, so cool. I think that's pretty good. Do you have any questions, Rhoda?
Question.
Anybody, Aurelia? I think I have to request her to unmute or something. Otherwise, she can't.
I don't even know if she's... Her mic is muted.
Yeah, it shows that for me too. We don't even know if she's still there. Maybe she's waiting for you guys to leave. Maybe she's shy.
No, I'm not shy. It's my kids.
There you are.
I'm listening in, just my kids, and
Oh,
it's
yeah,
like
yeah, no
it's their
problem.
dinner time, so I'm kind of making dinner and listening in and watching at the same time. So, but I'm fully with you guys.
Well, just make sure you ask me, anything. But I'm gonna try and do this like 3 times a week, ideally 5 times a week. But whenever I have the energy, and I
Is
might
there any way
do.
we can do this like at a later time? Because that would be better for me.
Maybe is it better for anybody at a later time, or is this
Yeah.
better?
Yeah, it's fine by me. Yeah,
Yeah,
evenings are fine
yeah.
by
It,
me.
it depends really. I'm not sure. Like for me, it's better at this time
This is, yeah,
because by the
because
end
this,
of the day, I'm so beat. And then when I'm beat, what I do is while I'm tired, I start to do my research on what we're gonna fucking go after the next day.
mm,
Excuse my language, little kids.
Uh,
yeah.
Mommy, he said Fuck.
So, hey, can you go over your play on NKLA today? Like this morning,
Yeah.
because you alerted, and I was like, okay, I don't know what I was doing. I was focused on something else, I guess. That's why I didn't get in.
Yeah, let me just screenshot this and share this with you guys, and if it lets me, let me see. I can always put it in the group. Yeah, I'll put it in the group. In the Discord. All right, because that was interesting. I don't
Rhoda,
know if you.
what broker are you guys using?
I'm
Rhoda
using
and
Thinkorswim.
Thinkorswim? Okay,
Yeah.
yeah,
Yeah, the same here.
okay.
Yeah, what I did is they sent me an email saying that I could schedule an appointment with a teacher for
Oh,
45
okay.
minutes.
Oh wow.
And that's how I learned how to use the certain screens. I just need to set up my screens where I have the active trader and a chart, because right now I'm flipping back and forth.
Oh yeah,
I see.
yeah, 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 yeah. I can't even understand how like Stephen Ducks and like all those guys use one graph. I'm like, what the hell? Like, I have made so much money, you guys, from being able to see everything and going, ooh, there's an opportunity.
Yeah,
You, you, as a day trader, you have skills and you have your tools, and all you really need is opportunity. And I can't just
right.
choose one stock and then
And courage.
like
I get
amplify
so
my bets
scared.
to like make up for it. Then you like, yeah. So I
Right.
look at all the opportunities going on, and like the other day on Friday, I believe it was, I saw that the SPY was just tanking. I had never really traded SPY actually. I think maybe a few years ago, but just my instinct said, boom, let's get some SPY. So I look up the SPY puts, boom, I bought 30 puts. By the end of the day, I had made 13 grand.
There
It's
you
just an
go.
instinct thing. You got to get good
Yeah,
at
yeah,
That's
yeah.
that's what I'm missing, because I see it after the fact. Oh, I could have shorted that. Oh, I could have
And the
bought.
only reason you saw it after the fact was because it wasn't in front of you.
No, I have it,
Yeah.
like, I have it on my watch
All
list,
right.
and I just go up and down on the prices. Like if it
Okay.
moves, I just go to that and then bring up the chart, what's going
I'm a
on.
very visual person. I can't tell by just the price changing, the numbers, whether or not something is panic sliding down like blood, or if it's just ticking down. So I have to see that chart and see it going screech.
I think I kind of taught myself that in the beginning because I didn't know how to use Thinkorswim to figure out what's going on, if the stock is going up or down.
That's funny.
But
That's funny.
now that I've learned a few things, so I'm gonna try to set up my screens where I don't have to flip back and forth.
So let's see.
List.
Aurelia asked me to show her how I traded Nicola today, and I'm trying to remember. So let's see.
Right. So you alerted before the open.
Right, because we knew that this was a big event today. 35 went to 53. So that I've done a lot of chart studying on what happens to stocks after they have a sudden increase in volatility like that. And what I found interesting is, and you might go check this out on some charts, if it's unusual, what you'll see before the volatility event is the average true range of bars is smaller. And then a big volatility happens, and what's interesting is from that day forward, all the bars are big.
Mm-hmm.
It's almost like the stock grew up and became a man.
Right.
And it's like now it's, you know, able to do bigger moves. And so, and that's exactly what, of course, you know, what's his name? Tim Grittani and all these guys are trying to tell you. They go after, they're looking for those big percentage gains in the mornings. The reason is because of the increased volatility. Well, it's really true. It's like all of a sudden you're going to get big moves on the day. All of a sudden Nikola is going to start trading like a penny stock, you know, 35 cents to 54 cents, you know, at pre-market. So yeah, I did
So
that.
right at the open. So when you alerted, I think it was like a few minutes before the open. So at that point, I should be on
Okay.
my trading screen.
Let's take a look.
Is that what I'm supposed to do?
I think possibly I can show you this possibly better because all these lines are in the way. No, let me get rid of these lines like this. Multiple moving averages. Okay. Boom. Okay, good. So we're just looking at price action now. And volume. All right. Are you able to see that pretty okay?
Yeah.
Okay. All right. So this is awesome. And I've programmed my custom indicators on Thinkorswim to show me a little bit more than what you can see here. But the opening price becomes a line, an important line. You should almost like definitely have an indicator that shows you opening price. I think probably this was the opening price. Okay, so I'm sitting there, I'm watching Nikola look like this. Like, so let's pretend each passing bar is going like that. And
Is that pre-market?
okay, so no, I'm thinking well, first bar. Yeah, don't even look over there. Right here, let's say it's the first minute of the market. All you see is this red one, right? And then you see this big green one. Now, I need some kind of confirmation to say, okay, that means the price is going up.
Right. And
I need more than one candle. So the next bar, you know, I can expect a pullback. It can happen. Or it could be another green bar, but that won't be enough for me. Okay, it was a pullback. So now what I'm hoping now is to see some movement either back up as a green bar and maybe past that high. And that will confirm a trend for me. And then what happened was it went back down. So now I'm thinking, okay, we've just reversed and went back down through the open. And to me, that's a pattern which is bearish. It means like now the price could potentially go down all day unless a trend establishes and it just happens to go the other way.
But
So
then also because the Dow and the NASDAQ were like tanking.
Yeah, so like I was pretty worried about that. I was like, it's quite likely, but but here's the thing. I'm thinking the only way I could take this trade now is if I get confirmation that it is going in that direction. So I'm gonna need some up bars and then a down bar so I can get a lower high and a lower low. I'm just not getting that yet. So I'm still watching. I've got to get some kind of confirmation. And I do get that up bar and another up bar and then a down bar. So now I'm thinking, okay, this could be something to short. Now, I don't know why, but I think I just did not. I think because the news was positive, I didn't want to short into positive news.
Right.
So my instinct was telling me, that's not how we trade this kind of a thing. We want to get in long on a good news trade. To go short on a good news trade, that's a whole other system and might not be for today. You know what I mean? So
It was a pretty strong catalyst. So it's
so I'm thinking not a good idea. Just let it do its thing. Maybe it'll bottom.
Right.
So I'm literally thinking that. So then it does this, and that right there started to pique my interest because it's like it's starting to show some strength. It's getting over the previous candle, right? But you can see also that it only did 2 candles of strength of higher highs there in that
So
little micro trend. And
these
this
are
one was
minute candles,
3. What?
1 minute candles.
These are 1-minute candles? Yeah.
So how
So
many
then the
minutes?
next candle comes, and I'm like, okay, so that's definitely not confirmed. It's not going lower, and it could go higher from here, and it would still be a micro uptrend, right? But it wouldn't deconfirm the larger downtrend yet. So I take a look at the size of the trends, and then it went down. So it's like, oh, well, that's continued confirmation. It just broke that micro trend. That's continued confirmation of the downtrend. So let's just keep fast forwarding. That once that happened right there, that negated like this entire zigzag. This like 3 bars negated that entire zigzag, and it was on increasing volume. You can see those faint background bars are volume. That's about where I knew to start punching up, the NKLA options, and I think I even bought, because I think I had it already ready. I bought one at market right here, then it did a pullback. I think I bought another one at market there, and I just started buying into that. And then somewhere along here, I sold almost everything. You remember that?
Yes.
I think
Yes,
it might have been.
I saw your post. That's why when you said you were selling more, I'm like, I thought you were out.
I think I sold everything right here, just about everything. I might have sold one here, one here, and one here, and I had 10 or 20 contracts. I forget. I think it might have been 20, and then I just flattened when it hit this,
Mhm.
and then it started. And I was looking at the volume candle, how it increased. So I just got out, and then it just baselined for a while, and I was just watching it. And I believe it was right here that I bought again, because I thought, oh, this thing's gonna break out again. It was either there or another one that's coming.
Yeah, and then it went down to the 48s. I saw that and I was like,
Yeah, but I did a little
I should
dollar
get
cost
in, but I was like, should I not?
averaging. I stayed in, and the reason was because it was kind of holding this support level.
Hmm.
So I felt
Yeah.
like, if it broke and just showed red, I'd have to get out, and it would suck because it would be quite a larger kind of like stop loss percentage than if I had gotten in at the base. But that base was a great spot to get in. So in fact, I think I started picking up extra contracts throughout here, and I think I was up to about 15 or so. Yeah.
Evan, well, can you hear me?
Yeah.
Sorry, before I forget. So for this one, the NKLA, did you buy at Delta 0.75 or first of all, was it in the money or was it at the money?
So because it was a day trade,
Mm-hmm.
I believe it was at the money.
At the money.
At
Okay.
the money, shortest expiration. Just because I knew it was a day trade. I knew 100% I was not going to be holding this overnight.
Mm-hmm.
I was just going to take a move, and I expected it to eventually be over, and that I was going to be in and out. I didn't expect to hang out in this or to leave myself exposed. If I did, I would have got at the money. If I thought, man, let me try to find a real good low here and get in for the next 7 days worth of gains. But I know NKLA. I've traded it a couple times already, and it's very hated, and it's not going to stay. It's not going to have a multiple day run. So anyway, as you can see, it went in my favor greatly. And then right around here, I was going to sell some, but one of our members started sharing me his book maps. I don't know if you've heard of the book map service. Well, book map can show you like where all the orders are. It's just awesome. So it shows you how many orders there are on the books.
Right.
The entire system. It's more than your typical level 2. It's the
Is it
entire book. It puts it
subscription?
in a graph. It puts it every. It's incredible. So he passed me a couple of those charts. You might have even seen it in the group. He was
Yeah, I
passing
saw.
it to me. And by examining that, I said, oh, I got no worries here. Just let it pull back. It has strong support at 52. It had like 200,000 shares at 52. Just let it do its thing and let it breathe a little bit. So I did. So and when you think about it, the stock is doing what the news said it should do and what the catalyst said it should do, which was go up. So you got to let it breathe a little bit and let the news take hold. So I did. And so it did a little wiggling. And then it continued that little bit. And I believe I started to sell some contracts around here because he showed me 55 was a giant order. There was like a huge block order at 55. And I looked at other orders and I knew that I was going to sell at 53.85 and 54, 40, 35, some other numbers. So I was definitely selling a lot right around here, but I didn't expect this massive pullback. I thought we would touch 55. So I think I held on, waited for this bounce and sold some right around this lack of follow through. Probably got out of 2 remaining contracts right around here. I think between those multiple entries in the day, I think I made like $4,000 P&L for the day on that. Unfortunately, I gave like $2,500 of that back just trading SPY today, which just was real choppy. Anytime something gives
By
you
the way,
what?
even that bookmap member is me, SB.
Oh, that was you?
Yeah.
Is that
SB.
yeah.
Oh,
Yeah, it's my initial Sachin Bhagat, so I go by SB.
I figured that when I joined.
well,
Is
thank
it
you very much. Without that, I wouldn't have known to stay in the trade.
is it a subscription? The book maps?
Now, I would have
Yeah,
just.
so
Mhm.
yeah, I have the subscription for a while now. So I not only go for MBO data, I also have NBBO data, which is the national best bid and offer. So I see ARCA, I see NASDAQ, I see all the feeds via DX feed in my bookmap. Basically all the best bids and offer that everyone compile limit order book. So you can really see the depth of what is going on, what market makers are doing in the back end, what the intent of the market is. Some days it's so obvious, but some days,
Yeah.
like due to high volatility, if there's a bigger game going
On
on,
a less
you have to
liquid
play.
stock, it's very obvious. You can see big orders on a less liquid stock. On a very liquid stock, not so obvious, but you can see it. And like I don't know if you were just going to explain, you can see orders moving around too.
Yep. Yeah, they do a lot of stepping and laddering. I see those market makers do.
You can see
Every time
algorithms
I cannot trade without it. Yeah, they stop stepping up the lifting the offer. You would
Yeah.
see that they will add big chunks, take it out. When business is done, you can see when the business is done,
Yeah.
and you should exit too. I can also see the trailing stops by some big institutional orders. I see iceberg orders sometimes. Like one time I saw like a big bids like came in like 150K and the offer was only 1,000 shares and it ate all of them. So that was an iceberg
Interesting.
hiding.
Yeah.
Yeah, it ate the entire bid and I'm like, you know what, that's it.
Now,
Someone do not want this level to be taken out.
Now, if I didn't have your chart, the way I would have traded this is when it got up here, because when it got up here, I had your chart, so I actually just didn't care, and
Yeah.
I just let this fall, and I just let it, build up some more steam again and let it go up here. But if I didn't have your chart, I would have sold right here, because this would have been the deconfirmation of this whole trend, right about here.
Right.
Because see, it breaks down this low right there, the low of this zigzag, boom, total reversal.
Yeah.
And I probably would have taken some profits at these peaks as well. And by here, I would have been 80% out of my position already, and then here, just taking off the last 20%, I would have been out. But I was able to hold on for this little peak here and get a little bit more profit out of it.
Yeah. It came all the way to the 50. Like I think I saw on the book map some insider market. They had last trade 54.80. So there are
Uh,
some
I had seen
offbeat trades
that.
that
Might have,
fell in 54.80. I saw that went all the way in the inside market. They traded at 54.80.
so what do you think, Aurelia? Does that help to hear how I
I cannot trade without it, honestly.
was
Like I
thinking
don't even look at
on
charts.
that?
Uh,
Or
me
me?
for chart is just. I'm sorry, what?
Oh, he was saying Aurelia, but I asked for the play. It's Rhoda.
Yeah.
Oh, you did?
Yeah.
I thought Aurelia wanted me to see that. Wanted to
Um,
go over that. Oh, okay, cool. Thanks for asking me about that.
Anytime.
so book maps might be a better subscription than STT, than stocks to trade.
Oh, good Lord. Yeah, but except that I think the one that he has is pretty expensive. How much is it a month?
So it's a feed you pay for. I think there's $120 for NASDAQ feed, and then I take ARCA feed. That's like $34 a month extra. The Bookmap subscription is eight or $900 a year
Okay,
that you pay.
so it's actually cheaper than
Not that
stocks to
bad.
trade. But
Yeah.
yeah, when you get serious and you are getting into things with large positions and you want to
Yeah.
maximize your
You.
confidence about how to hold your trade, I think that can be a real help. I've been looking for something like Bookmap for years. I've been asking people to please program whenever the level 2 information, can
Mhm.
you put it on the chart so I can see it? I would like to see the size of the
Right.
orders on the chart. Like just put it in a rainbow map or a heat map or something. Boom, Bookmap did it. So good for them. That finally, still
It's
not here yet.
amazing.
You have to subscribe to that and have it in another window. But
Right.
I think you, Rhoda, were telling me that it's being bought by TDA, right?
No, I didn't.
Somebody told me it was bought by TDA,
Oh, really? Yeah.
and they're
Book
gonna
map?
try and incorporate it into Thinkorswim. That's
Yeah.
good, but they should also
Heavy
upgrade the
application.
fuck out of Thinkorswim because, God, that program hasn't changed in 20 years, man. There's so many
Thinkorswim,
things.
I mean, it sucked. I only used for charting. I mean, they were down. Remember, like,
Yeah.
I couldn't execute the trade because of, so I do use Bookmap every day, but there are certain levels. Like when I put the charting levels in Bookmap, I use Thinkorswim chart, daily chart levels, because I only look for support and resistance. I have no indicators whatsoever, and all I trade by where are the heavy resistance are, where the support levels are, and then how the market book looks like where are the big level critical levels and how market wants to trade today, and that's it.
Yes.
Everything else, I cut the noise to zero. I have zero indicators on my chart.
How do I stop the screen share? Did that just stop the screen sharing?
No.
uh, yeah, usually options above, I think you should be able to.
And now I'm going to share, where is it here? Why was I going to show you this? There was something I was going to show you. Well, there, I'll just try and pull it up. Okay, there it is. Wow. So this is a 4K screen though. Optimize screen share for video clips, share computer sound. Interesting. All right, do you guys see that?
No. It's still
No.
the NKLA chart.
It is?
Oh, there you
Yeah.
go.
Oh, okay, good. So,
Holy cow.
well, that's not even holy cow. That's just 6 stocks. That's my 6 in-focus stocks for day trading. Each column is a bunch of information for that one stock. And
So how do you this is the active trader screen?
This is
uh,
Thinkorswim.
well, it can be, yeah. It is, but it doesn't have to be. You can design the
Oh,
screen from any screen. A lot of those, there
I
it is,
see.
Active Trader. A lot of those
Yep.
screens you can pop out and you customize them
Right.
and change them to the
I know
point
that.
where you could make an active trader screen a pairs trader, and you could make a forex trader screen a options trading screen. You can kind of construct them however you want. They just kind of come pre-designed that way. So yeah, I have that set up in the active trader screen.
So how do you get your options,
Okay, so today, like when I was trading
the options chain?
Nicola, I had Nicola here.
Mhm.
So I'm going to type that in. Oops. Codex Nicola. Okay. And then next to it, so like during the day, I'm deciding which strike I should come in at.
Mhm.
And we said I got in about right somewhere in there when the trend was confirmed. So that would have been about the 45. I probably picked the 45 strike. So over here right next to it, I pulled that up. You type dot Nicola 20 because it's the 2020.
Where are you where are you typing?
Into you can't see that up there.
No.
Everything's too tiny, huh?
Yeah.
Let me try and
It's a high
share a
resolution.
portion of the screen.
Oh, so you're in another box. Okay.
Yeah, but let me try and. Does it let you do a portion of your screen?
So
White
basically, that's the option ticker you're typing in, right? Even
portion of screen. Oh wow, it does do that. Okay, share. Oh, perfect. All right, now I go like this. And can I change the size of it? Oh, you can. Great. All right, maybe this will work. Okay, so
Okay.
is it doing it? Are you seeing it?
Yeah, it's side by side.
Yep.
So you
Okay,
have,
so now
and
over here, up here in the second box, I type dot
uh-huh.
Nicola. That
Uh-huh.
brings up the options.
Okay.
And because I'm day trading and I already know I'm going to get the at the money shortest expiration. I don't give a shit about deltas or anything like that. I
Right.
know I'm day trading.
Okay.
I don't go to the option chain. I just type it in. So the 20 for the year 2020, and then 09. And it's showing me like the different expirations as I whittle it down. And I see, okay, 11 is the shortest one. So I type 11 and then puts or calls. I want calls. And then it's like, which one? And I know it's at 45 is what I was thinking at the time. So I look up 4 and I see if it has 45. And I can
Okay.
see that it probably does because it seems to have every one of them. I hit 45 and hit enter. And then it pulls up the chart for that option. And at that time, let me get the pointer tool.
Yeah, right there.
Sorry, I made the thing move. I don't know why.
Oh.
How do you not touch this window you're in? Oh my gosh, come on. Why would it do that? Oh, okay, all right. So at that time, it was at like 4.5. Are you able to see that?
Yeah.
I
Yep.
don't know. Okay, it's not giving me the little weird thing. Okay, because I'm on that thing. Shit. Okay, I'm gonna click here. All right, so that's how I do it. And then right down here in the active trader, I just
Right.
click either
Good.
buy market, and I already have it set whenever an option comes up to quantity 1, and I already have all my little things ready to
There's the
go.
auto send.
And I can buy the market. If it's a fast moving moment, I just buy the
Yes.
market. If it's a
Mhm.
slow basing moment, I'll join the bid and I'll wait for my order to be filled. Or if I can see that it's like in any second it's going to break out or something and it's basing, I just would rather buy the ask. That's the same as buying the market, but it has a limit to it, kind of. It's like the current limit ask price. So I use those. And then depending on how much I'm feeling the action, I'll just click that button like a lot of times. So I'll go like toot toot or toot 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 toot
Oh,
toot
so you don't
toot
have
toot.
to like type it in how many contracts you want. You just because
I
it's
don't deal with that shit because
set at
I put
one, you
auto
just
send on.
okay. Okay, got it.
Single auto send, time and force day. That's what's so cool. And then I think somewhere in your preferences you have to choose like don't confirm my orders.
Yeah, yeah.
Yeah, but
You
if
have
I
to
wanted to,
you have to
I could, do all that like you just said on an options chain,
Uh-huh.
Then when I select buy, it pulls up the order fulfillment, area, and then you can kind of like get your price just right. But seriously, toss is just so freaking clunky like that.
Yeah.
That I can even order options orders like that in manually faster in Fidelity.
Huh.
That's how slow toss is at that. It's just like it brings up that window at the bottom, and it's like then you have to get that. It gives you the worst price to start with. It doesn't even give you the mid. And then I gotta look at the bid and the ask. I gotta mathematically think what's the mid. I gotta type it in or bring it up to it. The little plus minus things are hard to click. I mean, it's just ridiculous.
On the options chain screen, if I put an order at the bottom, there's a slide thing where
Yeah.
you can, where
Mhm.
it figures out the mid. So that's what I do. I just slide it to the left and then hit or
Yeah, it
send.
does have that little slider thing. That's true.
Yeah.
But I like to see like is the ask going up on me and I don't know. I'm kind of weird. But I don't have to deal with that if I'm day trading it. So I just click I just pull it up like that. But I think, I'm going to even restructure this because if I have that set up, I can only monitor 6 sniper positions. Like if you think of those as like sniper day trading active positions,
Mhm.
I'm watching, 128, but then I kind of type in 6 that I like. These are the tastiest. And then from there, if I pull up the option next to it, it uses my whole column for that. I'm only really able to options trade three because I'm using 2 per each one for the underlying and one for the option, and that's still a problem because if I'm wrong and I kind of love trading that stock or whatever, like I want to trade it because I'm like on it and it's got a lot of volatility and I want to reverse and get puts, then I gotta go up to the top and find the puts and everything. What I would really like is to have maybe put like the best put on the left and the best call on the right, and I can just be buying that one, sell that one, sell this, boom, 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 boom. And when it comes to day trading, you gotta have everything so prepared.
Yeah.
Preparation
So
is so important.
if I want to use my laptop and um, a desktop, I think it let me log in and both.
Yeah, I don't know. I've never tried that, but I think you can do that.
I think
On
only if
Thinkorswim?
I'm trying to
yeah.
think. One application doesn't let me do that. Is that TradeStation? What? Something always. I always go to the screen and it says you've been logged out because you. Oh, it's a trading view. Yeah, no, I think you can do it in Thinkorswim.
With Thinkorswim, you can do it because I use it on my desktop and my laptop.
Okay.
Yeah, you can do it. Multiple
Okay,
It'll
instances.
great.
be like additional additional screens.
Aurelia, did you have any questions?
I was waiting for you guys to finish with that. It's okay. For I was just wondering if, let's say, you're in a trade and you know it's gonna go really well, but the ups and downs and stuff like that, so it drops. So how do you manage your risk? Do you, like, with regular stocks, we will buy to average down till you've gotten to a point that okay, you can't take it anymore and you exit. So with options, how does that work? Do you buy more calls to kind of average
Yeah,
it down? Because you
that is
remember
true.
how I was kind of asking you throughout the day how you
Yeah,
manage, so I wanted to know, can you buy more calls, let's say 2 more calls or 1 more calls, and how does that benefit you if you
right.
know down the road is going to be the
Well,
price is
if
going to
you
go up?
let's, I mean, first of all, you have to know what is, your position size. What is your preferred position size based on your account? And usually that should be
Mhm.
no more than 5% of your account. So like for me, this is
Mhm.
a $25,000 to $30,000 account, and so I don't like to get in more than like $1,200 on anything, no matter what, whether it's a day trade or a bunch of options I buy. Otherwise, I start having a panic attack.
Yeah.
You gotta, if you're getting in over your head, it's a little dangerous. And of course, we all have the buying power where we can buy 4 times as much, but it's not a good idea. So I don't ever. I have the leverage, but I don't ever use it. I have in the past, and I lost on $1.7 million when I was in my 20s. So I'll never do that again.
So then if it's going against you or if it's going really down, then you just exit, you don't
Oh,
average down.
So yeah, so let me start first at the, so you got to make sure that you enter the position with kind of like the position amount that you want. And in some cases that might mean at the beginning buying a couple contracts. In some cases that might mean it's so expensive you can only buy one. So, but if you have a couple of contracts, it's kind of cool because then at certain points when it has a nice rally, towards the top of that rally, when it starts to peter out and stuff, you can start selling one. You can just peck one off. You can just sell market or something, or join the ask, and you can just you just sell one. Let's say you had 10, so you just sell one, and then you can sort of monitor it and say, is it getting worse or is it getting better? Is it holding? Let me just stay here for the minute. Oh yeah, I better sell another one. So then you sell another one. So if you have a bunch of contracts, it's helpful because you can kind of get out little by little. But then in order to know when you should just get the hell out, that's when the trend reverses on you. And that takes...
Microsoft for me.
Yeah, what was that, today?
Microsoft, I'm like, I got in, we got in, was it last week? Yeah, last week.
Yeah.
Um,
Well, I stayed in. So
You're still in Microsoft
I'm
though,
still
right?
in. Yeah. So I didn't get out of Microsoft. I'm holding that for a few weeks.
So you're down then, are you? Have you averaged down or something?
Oh, probably. I mean, on a day like this where it's like practically a market correction slash crash, um, you're going to be down 30 to 60% on some of these swing trade options. But the good thing about buying however many months we bought is we have a lot of time to just see how this develops and then decide or whether or not we should, cut our losses and be in an emergency or not, because it's not going to lose all of its value too fast. So we have some padding, but it was so extreme. It was so extreme that even now we're probably at 40% loss on some things, 50% loss, but it's not realized yet. And in a couple of weeks or months, we got to watch how this develops. But in a couple of weeks or months, things should be coming back just fine on us. And if they're not, if this whole week is just unbelievable, if it's just, then yeah, we've got to sell, and I'll definitely let you guys know to do that. But today wasn't the same as Thursday and Friday. The market dropped a lot because of oil dropping. It was a different reason. So to me, that makes me have more confidence in that, once we get that through that second reason, we'll be back on track again. And but I can't tell you for sure. So we'll see how this week develops. I'm kind of feeling like today kind of bottomed though. I think tomorrow it's going to test a little lower. But, for example, today I tried to buy puts on SPY at one point when it was like at its max panic, and I was hearing those roller coaster screams in my head. Looking at, and I was like, bam, that's it. And I did what, I was prepared. I did what I just showed you. I just hit bam. I just got a whole bunch of puts at market. Boom. And that started to work. But then almost immediately it just started to go back up again. And then I had to start kind of like getting out at a loss here and there. I lost like $800, I think, by the end of the day, maybe 500. I got lucky a little. But my point is that right now, the market isn't just going down anymore. It's kind of chopping now. It's hitting bottom. It's finding support. There's buyers interested. And so I feel like it could go further tomorrow and continue to test with lots of pressure. But I need to see. I need to taste what's going to happen tomorrow. So I have a feeling that what happened on Thursday and Friday is not going to happen again, and that what happened today could happen again, and by Wednesday it's starting to recover, and maybe Thursday and Friday we end the week up almost break even or in the green. If it's better than that, great. If it's break even, I'm happy. Anything not negative would be positive.
Yeah. So for the hotter stock today, WKHS.
Which one?
WKHS.
Yeah, what about that one?
Yeah,
Yeah.
it pulled
What
up
you
at 21.
Yeah, it's kind of consolidating now, so that's good aftermarket. Because my biggest fear is aftermarket is when all the bad stuff happens, it just dips. Everybody like open the next day, everybody is like panic selling and stuff like that. So it's kind of holding, which is good.
Yeah, that's true.
I
Yeah.
kind of have a feeling it might dip a little bit just because that's for some reason this market doesn't follow. Although I'm new, I'm kind of realizing that everybody kind of, once it goes up, everybody sells. Like people day trade it more than hold on to a
Yeah.
long term, like 2 weeks, 3 weeks. They don't do that anymore, right? So you would think it would hold steady, but it kind of gives a huge drop. When there's good news, good earnings, market drops. Like it doesn't make sense. So I'm kind of planning ahead in case it drops tomorrow or the next day.
Good.
Like what is my strategy for it? Because I can 80% I think it would, right? So would it be a good idea to add more calls to it once it drops, or just hold on to it, whatever I have, and just let it ride?
Well, yeah, let's take a look at the daily in a moment here. One thing I want to show you guys is after 20 years of trading the markets and day trading, uh, it wasn't until more recently that I programmed my custom indicators like this to show the the stock price relative to the open price and paint it green or red if it goes under, right? And in this case, you can see it's all green. So I started to notice more easily the shape of bullishness, which is very
Okay.
interesting. And so if you look at like Workhorse, to me, it looks for that first half of the day very bullish, very bullish.
Yeah.
And then it held its bullishness, like it didn't lose everything and then go red on the day. It held its bullishness, but not as strong. By the end of the day, it ended kind of half strong. I would almost call it like strong or weak strength, right? Now, let me show you another one. Okay, that was the one that I bought, SDC. This is, I just want you to see the difference. This is an example of a stock that is bullish, 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 bullish
Yeah.
all day long.
Yeah. Yeah.
And it just keeps going and keeps going. I mean, it's not like the ones that are so easy to spot, which are just, they just go straight up. But you can see here that it just continues to get better.
Was there a catalyst for SDC?
That was SDC, yeah.
Was there a catalyst for it?
Oh, Catalyst was, I looked into it, I forgot what it was.
Because I wanted to buy it and I couldn't like I don't want to just jump in it because it's going, right? Because I wanted to know the catalyst, but I wasn't
I
sure
didn't
what
like
it
that.
was.
I didn't like that it dipped at the end.
Yeah,
Because you
but
know
it's
what?
still strong
It
because, yeah, but it's still strong because, let me show you the candle. Okay,
People are just selling off to take profit at the end of the
Because I
day.
kind of
Right?
wanted that little, little green candles going
look
up,
at this candle here.
Mhm.
This
Yeah,
candle. It's
yeah.
almost a very bullish candle. This one would be a very bullish candle because it has almost no wick at the top.
Mhm.
But
Mm.
when it closes within 90 to 95% of the high of the day,
Oh, I
but,
Mm-hmm.
forgot.
but even more especially because you could only tell that what I just said from the daily candle, but more especially if you look at the daily, the minute chart or whatnot, and you look
Mm-hmm.
at the daily action, if it's just all day strength like that, that's strong. Strongish close plus bullish entire day, that's good. Like that's definitely going to continue tomorrow at least a little bit, like 15%, 20%, and you should be able to just sell after that if you start to see the trend reversal. You want to be able to read those trends. If you see
Okay.
that it's hitting the top and it's broken the trend, and now just get out, because the thing is you can always get back in. Get out, because if in a few minutes you realize you were wrong and you should have stayed in, then just get back in. No big deal. But if you were
So that
right, at least you're out. It's hard to
so
call
you
tops, but it's easy if you just get out, and if you're wrong, get back in.
okay. So you day trading SDC? I mean, not day trading, but 2 days, 3 days kind of thing?
I traded that a couple days ago, yeah, and right now I have 7 contracts, and it looks like they're break even at the moment. So
There's 7.
I
Okay.
think I bought at the close. I wanted to see how strong it closed. I don't remember,
Oh,
but I
okay.
think I did.
Okay.
So
Sorry,
it
what was
didn't
the
really go
name of
anywhere
this?
except a little bit down. But I expect it to go up. You know, if tomorrow it goes up to like, let's take a look at that daily again. I've done a lot of studying of these candlestick charts. You want to prefer stocks that have wicks on the tops of every candle. So let's take a look at another one here. Let me see if I can pull one up where that is the case. And I'll tell you why. Maybe this one does. Whenever you find
Wicks at the top of the candle means what? What does it mean?
it means that during the day it went up to that point at some point.
Oh, okay. Yeah, yeah. Okay.
And and if it
It's
opened
not
and
strong
if
enough to hold it. That's why that
It
part.
drops.
Yeah,
Okay.
yeah, if it's a green candle,
yeah.
it usually means that it started at the bottom,
Hmm.
down to that little bottom top thing
Mm-hmm.
down there, throughout the
Mm-hmm.
day eventually got up to the top and then closed down here. That's usually the pattern, but there can be one other way it can go, but that's usually the pattern. So what I want to show you is look at this. If if we open here, let's see, let me go back to a better example. Look at this candle. Even though it's red that day and then red the next day, you could have made a lot of money because look, if you bought at the close down here, the next day it got all the way up to here. So it went
Yeah.
from just because it it closes down doesn't mean that if you held overnight that the next morning you can't get some pop at the open and make some money on it. In fact, from my studies, almost 80% of the time, if you're in a stock, the next morning you can get out at a profit within the first 15 minutes. So that's pretty cool because if you're scared of holding something overnight, you have a very high likelihood that you're going to get a higher spike. It might not end well, and if you don't get out when you should, then you
Not
probably
not OTCs.
yeah.
And I've been burned so much trying to get
Yeah.
out, and I'm like, I'm stuck in here. It's not going anywhere.
Yeah, well, don't get stuck. Like, it's okay to lose money. Like if let's say you were gonna try that. Let's say SDC, we were gonna try that and we're in it, and it was like the end of the day, we bought and we're in because we think tomorrow it's gonna go up, and it does, and it goes up, and we're like, yeehaw, and then you go grab a coffee, but you come back and it went down, and you missed it, and you're like, shit. The answer is not to hold until it goes up again. The answer is how close am I to break even? Am I still up? Then get out. Am I at break even? Then get out. Am I below break even? Then fuck get out. Like just get out and then save the money and go trade on something else or wait for it to bottom and get back in if you love the stock or whatever. But if you're doing overnight, the overnight strategy is interesting because you get in at the end of the day and you actually make the most money by selling within the first few minutes of the next day. So you're almost only you're trying to spot the low on the day. You can get a double bottom or something and you get in there and then you just let the stock hold all day. If you find a stock with lots of upper wicks like that all over it, this strategy works perfect. The overnight strategy works perfect because all you got to do is in the middle of the day, be out of the position, in the middle of the day, hunt for a double bottom. And when you find that double bottom, just get in. And if you were wrong and it goes lower, sell and wait and get in at the bottom again. Just keep selling and get out until you're finally in at the bottom and then hold. The next day, it's going to wick up at the open and you'll actually make money.
That's good. Good to
Yeah,
know.
it's really, really encouraging too to know that you have a couple minutes at any open to usually get out at either break even, a profit, or a slight loss instead of going, my God, if you examine these candles obviously this was a bad idea, I'm going to lose 20%. No, you usually can get out for even a profit. On a bad day, on a red day, it goes up at the open. Most things that go down go up first. And they do that to fake you out. So they want you up and they get everybody excited and they get everybody in and it's FOMO-y and then they take you down and they get you trapped in there. And now they can keep you in the stock for years because that's what they want, you know. And they have less shares, and so that increases their value because they have a lower float and increases their like the amplitude of their news and everything. They love it. They love trapping you. Trapping you is the whole game.
Yep. Rada, I gave you the catalyst you asked for SDC.
Oh yeah. What is it?
It's in the chat.
Oh, cool.
They launched a new platform today.
In the
With
chat.
one of the partners. Yeah, Zoom chat you will see.
Yeah,
that,
yeah,
that
perfect.
was the
Thank you.
So what
Sure.
did Apple go down today? Was it red?
Yeah, 112.
Yeah, it is.
Let's see. See?
SoftBank still selling their calls.
But look, it went up
Existing
for a
positions.
minute. You always have about 4, 5 to 10 minutes to catch a spike in the morning, even on a red day. Isn't that cool? I think that's the most interesting statistic. That you
Yeah,
always.
but I think it's really hard to sell though, because sometimes, yes, you see it go up, but it simultaneously comes down right away. So you can't even execute it. Like, so
Yeah.
it's really hard. I think the only way you can get it, because people in their mind are already going to sell. So I think you're doing balancing. So the balancing brings it really down. And then if there is a dip buyers, then you're lucky to get it coming up again.
Yeah, but or you can watch the volume and you can see mini red candles and maybe get out right there. So yeah, you have the ability to reach a certain skill level where you can kind of see it. So
yeah.
So
it's not easy though.
that's why like I do a lot of this momentum trade. So I have these keys, you see,
Yeah.
one button buy and sell. So for us, it's like we don't wait, or that morning, that panic that you see, buying into the dip and selling. So it's like there are trades I stayed like maybe 30 seconds. So that's because of this. You see the keys, buy and sell, buy. We click
So
one
that's your
button I
hotkeys?
press.
Is that your
Yeah,
hotkey?
those are hotkeys. So
Okay.
1,000 shares, 5,000, 10,000. I have only one key. I press buy, and the next second I sell.
Oh,
So
that's good.
spike,
Yeah.
only one
You
key.
can even set up, I mean, for what he's talking about, you can even set up like bracket orders where you can just push one button and you have your
hotkeys.
stop loss and your profit targets already set. You can have multiple profit targets and then raise to break even. You can have it all laid out. Just one button.
I have 12 hotkeys, different thing it does. I have flat position hotkeys. Like I cannot trade without hotkeys. I never use my mouse.
Yeah. I try to set up my hotkeys. I'm like, nah, I'm done. Well, I'll come back to another day.
Yeah, it takes a little bit of.
I don't know why, but I don't like using hotkeys.
I don't know.
I don't know
Because
why, but I don't like
scared
using
I'm gonna make a mistake.
What?
Right? And then I'm scared I'm gonna make a mistake and press something I'm not supposed to press.
Yeah.
Or my
Not
kids
just
will
that,
come
but
around
if I'm
because they're
trading
always
multiple
around. They will
stocks,
come
how do I know
and press
which
my
one it's gonna
stuff.
sell?
Yeah. So
Half my battle is learning how to use Thinkorswim so I can trade.
It's definitely not perfect, but it's so extensible
getting
and
there.
customizable that it gets you pretty close. It's not the dream though.
Yeah.
Well, all right, guys. I
Thinkorswim
think
also
that's
has
good enough for me.
hotkeys, right?
I'm sorry, what?
Yeah, I think Thinkorswim also has hotkeys. You can set it up.
Yeah.
But they're not that great. Yeah.
I printed out the list.
Oh yeah. Cool.
All right. Well, let's
sorry.
call it a wrap there, and I guess I'll be back to do a little research later, and I'll be in the group.
Okay.
And talk to you guys later. Thanks for coming.
Thank you. Thank you so much,
Awesome.
Evan.
Thank you.
And
Thank
nice
you for your
seeing
time.
you guys all. Okay.
All right, Evan.
All right.
Good night. Good night, guys.
Okay.
Bye-bye.
Good night. Bye.